Get it. What better way to return than a portfolio update video? Haven't made one of these in about 5, 6 months now, but I promise when I tell you pretty much nothing's changed for my portfolio. I haven't really been investing that much. I've been investing the consistent amount of money every single month, about $600 a month, at least into my Robinhood portfolio, which is the portfolio that we'll be looking at today. So yeah, let's not really waste any more time. Let's get into the portfolio update video for December of 2023, the last month of the year. Robinhood, Face ID, and we are in. Right now, the portfolio is sitting at a nice $55,048.24. It looks like we're up on the day. Today, I'm recording this is December 3rd, so a Sunday. So the market's closed, of course. I'm up 33 bucks. So that's from the little bit of crypto that I have, or the lot of it now, because it's grown this year quite a bit. Looks like 40%. It's crazy. But most of my crypto, as you guys may or may not know, is actually on my Ledger wallet, my private Ledger wallet, which I don't have in my hand right here. But imagine it was here. Either way, I buy the crypto on Robinhood, then I move it over to the private Ledger wallet, and I'm all good to go. So let's go on back over to the main portfolio. So like I said, the day we're up about $33. For the week, we're up about $1,000 or 1.85%. For the month, we're up about 6.54% or $3,300, $3,378 to be exact. For the last 3 months, we're up about 3.42% or 1,800 bucks. Year to date, we're up about 16, almost 17%, which is great. Of course, we'd love to see that. $7,933.32. Over the past year, we're up about 10%, 5,000 bucks. And of all time, we're up about 14.5%, $6,988.45, it looks like right now. Now, I started investing into my Robinhood portfolio back in March or April of 2020. So pretty much grew this portfolio from $2,000 to $55,000 in about 3 years, almost 4 years now. So not gonna really waste any more time. The buying power is looking a little bit low because, like I said, I don't put too much money into it. So let's not waste any more time. Let's jump right into all the stocks in my portfolio right now. Before we do the stocks though, let me go ahead and show you the crypto just because I'm gonna move it around. A little bit of Ethereum, a little bit of Bitcoin. That's really all I buy right now. I also own Dogecoin and I own some Chronos, usually or formerly known as Crow Coin. But either way, past that, back on over to the stocks. We're gonna scroll on down, and the first stock on the list is ticker symbol SCHD. Now, SCHD was actually supposed to be a larger part of my portfolio going forward, and it will be over time. It's not my largest dividend ETF, but it is one of the larger ones, or at least I want it to be going forward. So 73.20 right now per share. I have about 14 shares. I'm consistently buying more and more of SCHD on a monthly basis. Nothing too crazy. Like I said, I haven't been putting too much money in this portfolio as I've been gone from making content, so I haven't really been too focused on that for the time being. So we're not going to spend too much time on it. Past that, we got my dividend and growth portfolio, ticker symbol DGRO, sitting at 52.10 right now. This is the one where I put most of my money into when it comes to a dividend ETF. And this one has 158 shares, as you can see, and I'm overall up about 4%. That's about $8,000 in market value right now. So that's 15% of my portfolio right now. So like I said, it is one of the largest holdings in my portfolio, and it is the largest holding when it comes to my dividend ETFs. Also consistently buying this every single week. Sorry, I had to turn off my notifications. Either way, JEPI, ticker symbol JEPI, that is JP Morgan Equity Premium Income. If you haven't learned about JEPI, definitely learn about it. It's an interesting type of investment to be in. It's not really a stock. It's more of a way to make some passive income every month if you want to go down that route, but it's also not really an investment you should look for as a long-term investment. It's just something to make some passive income, to get some dividend income from that you can use to put towards other things, especially if you have a nice amount of lump sum just laying around. So 54.55 right now. I have about 53 shares overall. I'm about balanced with it, only down about $20 overall. But if we go down to the dividends, you can see what I mean. The dividend payouts have been pretty substantial. We got $15, $17, $19, and $19 again over the past 4 months. So it is a nice dividend driver for the portfolio. Now, like I said, if you're not looking for something like that, then I wouldn't really invest into JEPI. And of course, do your own research when it comes to investing in these things. I talked about JEPI in a previous video if you want to learn more information about it. So yeah. Past that, we got ticker symbol XLP. or the consumer staples ETF that I like being invested into. This is at $70.93. If we scroll down, I have about 41 shares. Overall, up about 2%. Nothing to complain about here. I'm consistently buying it, so that's all I really got to say there. Past that, we got Apple, one of the best stocks in the world, if not the best. I think it actually is when it comes to market cap. But $191 a share right now. If we scroll down on Apple, I have about 30 shares. Overall, up about 40% with Apple stock. My weekly buy is paused because they're still flying. I'm waiting for Apple to, come back down, but I don't know. Apple's a different type of breed, man. I don't know. We'll see. I'm very excited about their Vision Pro headset that's coming out next year. We'll see what that actually, what that actually happens with, market share, how much money that actually makes them. Considering the iPhone, it's great, but it's a dying breed. The iPhone is getting, less innovative, and it's been that way for a couple of years now. And cell phones in general are getting less innovative, which makes sense. I mean, we've got to a point where cell phones, they all pretty much do the same exact thing. They're all extremely powerful, so we can't go wrong with it. I didn't upgrade to the new iPhone this year. As you can see, I'm still rocking the 14 Pro Max. But I do like it. It's cool. But either way, Apple, a nice little behemoth to have in your portfolio, I always think. So, hey, don't just go and buy it at all-time highs, but at the same time, if you're going to buy it at all-time highs, then dollar cost average your way back down as well. Past that, we got ticker symbol TSLA, or Tesla. Of course, one of my favorite portfolios, one of my favorite stocks, and of course, one of my favorite companies. Sitting at $239.40 a share right now. The Cybertruck actually just got the deliveries. So we'll see how the Cybertruck plays out. Of course, I'm slightly disappointed with it, only because of the price and also because of the range. That initially wasn't promised when it comes to the Cybertruck. But of course, our battery technology just isn't there yet, so I can completely understand that. I believe the Cybertruck was originally supposed to start at $40,000, and I think now it starts at $60,000 or $70,000. And on top of that, I believe the range was supposed to be around 500 miles per charge or full charge, and I think it's around like 300, 350. So it's okay. It is what it is. Technology works the way technology works. Our battery technology simply isn't there yet, and that's okay. So I'm excited to see what Tesla does with the Cybertruck, how the sales go and everything like that, how many they can produce over a given year. It's a lot of information and a lot of fun to be had with Tesla stock, as always. Overall, I have 18 shares of Tesla stock. I'm up about 26%, and I will be buying more. Past Tesla, we got ticker symbol MSFT, or Microsoft. Oh, love Microsoft. Of course, with the whole AI push right now, we're still rocking AI, ChatGPT 4. We're still going strong on that. There's tons of other AI competitors in the market right now. We're in an AI war, and we're very early on in it, which I'm not mad at. $374.38 a share right now. I love Microsoft stock, and I only have 6 shares. Overall, up 82% with my 6 shares. I need to get some more, but as you can see, it's expensive. Damn. Past Microsoft stock, we got ticker symbol O, or Realty Income. Realty Income took a beating this year, I believe. Yeah, down 15% this year. Love to see it though, because I'm definitely going to grab some more around this price point. $54.61 a share right now. I think it's undervalued. I definitely plan on picking more up. I'm down about 6% overall. Have about 27 shares with plans to buy more. Stag is sitting around $36.50 a share. I told you guys I would revisit Stag towards the end of this year, depending on how their growth went. This wasn't the best year for when it comes to REITs in the stock market, but it is interesting to see how Stag did over the past year, which year to date it's up 12%. It's okay, but I'm looking for a little bit more with Stag, personally speaking. We also need to check their dividend growth, so that'll be a whole separate video. But regardless, we go down. I have about 59 shares of Stag, overall down about 2.75%. And I'm going to keep what I got for now, but we do need to revisit and see if this is an investment I want to hold for the long term. Past that, MPW. Now, like I said, I haven't really looked at this portfolio at all in those past 5 months that I've been away from making content. So in that time, MPW has taken a major hit, down 54% year to date. So of course that dropped my portfolio. I wish I wasn't just holding a falling knife, but it is what it is. I didn't check the portfolio. This is more of my fun portfolio with dividends and growth. This isn't like one of my serious ones. So I'm not too worried about it, but I mean, no one likes to lose money, or at least have a paper loss when it comes to losing money. 158 shares. Of course, they're still paying a dividend out. It's not the best dividend. We're sitting down 58% on that, or about $1,100. Their dividend right now is what? I don't even know. 20%? Let's see something. This is the first time I've really been looking at my portfolio like this. Uh, wow. October, July, October. Wow, that's huge. Okay, we'll do some research, figure out if this is worth holding long term now. But I mean, at this point, I'm not at a major loss. We'll see. I might want to cut my losses and do some not dollar cost average, some tax loss harvesting before the year is out. But we'll see how things play out. Past that, we got Ally Financial or Ally Bank sitting at 3082, one of my favorite banks. This is 52. I have 52 shares of this, overall down 8%, 9%. I plan on buying more. Past that, JP Morgan Chase, another one of my favorite banks. One of the ones that's just too big to fail at this point in time. I feel as though, unless something crazy happened in the world. 156.84 a share right now. Overall, I'm about 15% with my 12.5 shares. Past that, Exxon, $100 a share. I've been holding Exxon for a while now. Of course, when gas prices were soaring, Exxon stock was soaring. Gas prices are starting to cool off. They're still a little bit more expensive than I like gas prices to be, but hey, I don't get to control that. So 12.3 shares. I haven't bought any more in a while now, and I'm up 123% with those 12 shares. Past that, we got ticker symbol KMI or Kinder Morgan. I like Kinder Morgan for natural gas, sitting at 17.66 a share right now. Overall, up about 1%. 56 shares with that 1%. And Kinder Morgan, I might hold for the long term. I do like Kinder Morgan. It's solid. They've been paying the dividends out. It holds steady. You know, I can't complain too much about it. Their stock price is okay. I wish it was a little bit higher, but you know, it is what it is. We'll see. We'll do some more research. Like I said, it's the first time I'm jumping back into all of this. Past that, Boeing, have not touched it. $234 a share right now. I think I bought it around $100 a share. Have not bought any Boeing since I originally bought it, and I'm up about 134% with those 5 shares. Past that, Disney. Disney has been oof. Disney is always in the news, man. They gotta chill. Like, oh man, Elon Musk was just talking about Disney and Bob, CEO and whatnot, for a lot of different reasons, which we're not going to get into in this video. But $92.50 for Disney stock right now as far as the price, down 18% with Disney. I still like Disney. I think it's still some space to pick Disney stock up at, but Disney just, the negative news on Disney is just crazy, man. I mean, you can't blame them. Disney, I feel like Disney isn't what they used to be, but I don't know. We'll reevaluate for sure. Lowe's, ticker symbol LOW, sitting at 203 a share right now, almost 204. I have 5.5 shares of Lowe's. Overall, up 15%. Lowe's, Home Depot, you can't go wrong. There's actually like a Home Depot literally right across the street. Funny enough. But yeah, pretty cool. Not mad at it. We'll hold it for the long term. Walgreens, $20.78 a share right now. Love me some Walgreens, man. I'm definitely going to get in Walgreens. I think it can go back up to that $40 threshold over time. So I'm probably going to double down when it comes to Walgreens stock. I still believe in Walgreens for the long term. So yeah, I'll probably end up picking up another 50, 60 shares. And hopefully hopefully that gets it back around that $40 range, and I can just take profit when that time comes. Down about 45%, as you can see with Walgreens stock. It took a major beating this year, down 45% overall. So yeah, tough. Verizon, also another stock that I want to add more shares to, just because I think it took unreasonable beating. It says year to date down only 3%, which is fine, I guess. But 38.60 on Verizon. I have about 50 shares, down about 20%. I bought Verizon at a high, as far as I know. I didn't think it was a high when I bought it, but whatever. Down about 20%, $448 or $488, excuse me. Main Street Capital, man, Main Street Capital has been holding steady for ages now. Year to date, we're up about 12%. If we scroll down, I have about 42 shares of Main Street Capital. Overall, up on those 42 shares by 8.6%. If you're looking for just a solid dividend company that's going to pay you out a 6-7% dividend on the month, every single month, then this is the one, man. This is the one. Main Street Capital it's been great. It's been great. Can't complain with Main Street Capital. I need to add more shares. The stock holds pretty steady, so you're not going to get a lot of growth out of it, but you'll definitely get a consistent dividend, which, of course, if you're looking for dividends, we love to see it. A 7% dividend is pretty solid. But at the same time, in this economy, a 7% dividend versus, maybe 5% in a high yield savings account, you could just put your money in a high yield savings account and not have it be sitting on the market, But either way, I don't think you can go wrong with either one in this case. Of course, the high yield savings account is probably better depending on how much money you're putting in, but that's just my 2 cents. Past that, Prospect Capital down to $573, down 19% on the year. have 119 shares, overall up 18%. The dividend yield on this, I believe, is around 12%. And they've been paying that dividend out consistently every single month pretty much since I've been invested, which has been about, it's been almost 3 years. Maybe 4, 3? Yeah, 3 years. 3 years straight. Can't complain. TGT, Target sitting right now at 134.78 a share right now, down 10% year to date. Target definitely had an interesting year. Overall, I'm still building out my position in Target, so I'm not complaining about it too much. I'm overall down only 9% because I didn't put all my money into it at once. I did dollar cost average, as I think you should do as well if you're just building out a portfolio for the long term. So we'll buy more Target, of course, definitely. Past that, ticker symbol COIN or Coinbase. 134.40 a share right now. It looks like crypto's back. I'm not going to claim that completely. Crypto's a very interesting space to be in, but I've made a lot of money off cryptocurrency this year. It's up quite a bit. I think I'm up about $4,000 or $5,000 on my Ledger wallet or just the rest of my cryptocurrency that I have. So I'm not mad at it. You can see year-to-date crypto or Coinbase is up 268%. So like I said, we already knew this. I'm not a genius. We already knew this. When crypto goes up, Coinbase goes up, as it should. So we'll see what happens over the next, over the next month of 2023. And then, of course, 2024, 2025. You know the deal. But hey, if you want to take a bet, if you think crypto's going to go up, hey, place an options bet. If you're feeling risky, place an options bet. It's up to you. Either way, I have my 6 shares that I bought when Coinbase initially went public on Robinhood for around $300 a share. So I'm still down quite a bit, but I'm not mad at this. I'm very happy that I ended up holding it versus just selling my 6 shares for like $50, in January of this year? Absolutely insane. So I'm happy with it. Past that, Waste Management up about 10% this year. Waste Management, of course, they handle the trash. You can do Waste Management or you can do Republic Services. I believe they also handle trash in the U.S. Up at 173.80 a share right now. We scrolled down 6.05 shares. Overall, up about 36%. Will I continue to buy Waste Management? Of course. Who else is going to take out the trash? Because I'm not. So, whatever. Past that, we got ticker symbol VOO. This is part of the challenge that I was doing. I'm still doing it. That's one thing I did keep consistent this year besides me making content was actually just buying this every single week. So portfolio has consistently been buying this every single week, up 20%. This is the overall market, at least the S&P 500, so the top 500 stocks in the U.S. right now, up 20% year to date. So literally, if you just bought this, you'd be up 20% this year. That's higher than That's literally higher than what my portfolio is up overall right now. I think I'm only up 16 or 17%. So if I really just bought this, I would have made more money. And I did just buy this on a separate portfolio. So either way, it just goes to show, just do this. This portfolio is fun. I like picking individual stocks because I like having certain companies individually. But overall, for the average person, if you don't know what to do, just buy a broad market index fund, sit back, chill, relax, invest into it every single month, every year, consistently, however you want to do it, you'll be fine. You'll literally be fine. This is one of the best things you can do with your money if you're going to invest your money. And it's also one of the safest versus buying an individual stock. Like I said before, buying Tesla and Tesla tanks, where's your money at? Hey, either way, it is what it is. Scroll down, 2.98 shares. Like I said, I literally just buy $5 of this every single day, actually. So this is based off me buying $5 every single day. And it looks like I'm not really happy with that because based off $5 every single day, you can see I'm only up 8%. So you can already see this challenge isn't really what I would crack it up to be. I think this challenge is best done if you do high lump sums amount of money. Say, for example, I bought $12,000 with ticker symbol VOO January of this year. I'll be up almost 20% on my money. But if I just did $1,000 every single month, then I'd probably only be up around this percent or something, give or take maybe 10, 11%. It just depends on the numbers at the time, of course. Depends on the stock price at the time. The point is, dollar cost average or lump sum. Lump sum usually makes a lot more sense when it comes to putting your money into the market, but people also don't have a lump sum amount of money, just a drop in the market like $10, $15, $20, $30,000. So if you're not going to do anything, then dollar cost average, maybe put money in every week, every time you get paid, every day like I'm doing for this challenge, every month, every quarter, up to you. It does not really matter. The point is, be invested. Because when you're invested, you make money overall the long period of time. So yeah, do what you got to do to make some money. That's all I got to say. Past that, we got ticker symbol AVPT. Man, I've been holding out, I've been bag holding this stock for too damn long. It's up 100% this year, which of course great for the stock. Love to see that, sitting at $8.33, and you can see the smile on my face. I'm happy about it. But at the same time, I'm still down because I bought the stock when it was like $15 a share. So either way, we're not quite where we want to be at with AdPoint. I have 300 shares, overall market value of $2,500 right now. Overall down 27% still, but it looks great. It looks great. I just double it again. I need another year of another 100%. Will it happen? I hope so. But we'll see. That brings it to $16. Like, that's absolutely insane. I didn't think about it. Damn. That's crazy. So the point is, it still stands like dollar cost average on certain things, especially like more risky investments. I think it's safe to do something like that, just because, like, you see how long it's gonna take me to make my money back? Do you see this? Like, I bought it at $15. It went down to like $3, and now we're just waiting for it to go back up. My average cost right now is $11.42. We're waiting for it to go back up past $11.42 so I can break even. Absolutely insane. Dollar cost average for certain things, not everything, but overall you'll be okay. And I think that is the end of the portfolio. So yeah, I feel like I kind of killed it. Went through it kind of fast this time, but yeah, that's pretty much it. I am back to creating content. I'm back to making more videos for you guys, of course. So let me know what you want to see down below. There's plenty to talk about in the personal finance space right now. I know Mint is shutting down the budgeting app, which I absolutely love. And I'm sick that they're shutting down because they have like 30 million users or something like that every month or daily or whatever. So I think that's crazy. Apple Card, it's looking kind of crazy for the Apple Card right now. We'll see if American Express actually picks them up because Goldman Sachs dropped them. Or will Apple actually go and create their own bank, their own Apple Bank? I don't know. They have the cash flow for it. Apple has so much cash, it's unreal. So it'll be interesting. So it's a lot to talk about, and I'll get into it in those separate videos. Past that though, I hope you guys enjoyed yourself with my content, with life over the past 5 months. I'm trying to get back to it, and this is me trying to get back to it. So thank you very much for being patient. Thank you very much for supporting the channel. As always, I love every last one of you. Thank you so much. Please continue to support the content, the channel, this video, that video, whatever you gotta do. And I'll catch you guys in the next one. I'm out. Take care of yourselves. Stay safe, stay positive, stay hydrated. Dollar Mike. Peace.